So yeah, as uh, as you asked, so this is an explanation of the Supertrend and Fisher strategy that we have been using, that we have been backtesting for quite some time. Uh, so there are two components to this strategy. One is the Fisher one is the Supertrend one. So the controlling component, the oscillator of the two strategies, is the Fisher one. So like any oscillator, it goes from one side to the other side of the market. It generally provides a tone of the market, which side of the market the price is on. So that is quite clearly understandable by the actions of the Fisher. So if we see this last 2 or 3 months, maybe from September, we will see that the Fisher has been pretty much on a 15-day interval, changing sides on a pattern. So this is happening all the while that there are all sorts of noise in Nasdaq. So Nasdaq is not a stable instrument. There are a lot of volatility there inside a trading session. On a long term basis, it moves randomly at some times, with like some news or something like that. Those things happen, but we will not see that reflected on the Fisher, because we are using a 21-day Fisher, which is which roughly rounds to 1 month of uh, price action. So at any point, the Fisher is considering last 21 days of Fisher. So let's say on the 13th of November, this point, it is considering price movements 21 days back. So maybe below up to this point. So from here to here, the price action is being observed and calculated on a normal distribution basis, uh, which is the base of the Fisher strategy itself, uh, and then being printed on the chart. So that's why it represents that much data so clearly. So that is very helpful, in my opinion. Generally, we need to have a side of the market, trade a side of the market. Yeah, it's sometimes when the price is actually changing, it might not be as smooth, but over a period, the goal is not to be profitable for a month. The goal is not to be profitable for a week. Any strategy that is true for any strategy in the world. The goal cannot be to be profitable for 15 days, 30 days, 45 days. It is to build something that can sustain for 1 year, 2 year, a 5 year period. Obviously, in a 5 year or 10 year period, there would be market events that would make it necessary for the strategy uh, to be adjusted, to be modified at some point, but it should hold up at any point of time, and it should be based on numbers or mathematics, as we would say, not something intangible, not something that can be that can't be put into a logical model. So that's the future part of the strategy. Now we can't only trade based on the side of the market. We need signals. We need to have entries, exits of any trade, any asset. So that's where the super trend comes in. So our super trend is set on a 10 period. I tried 12 period, which rounds to half a day, but the 10 period, it works better because maybe more of the people are using it using that 10 bar logic on the MA as well, moving average, that is as well. So that kind of it gives some tune to it. So we also want to go to the 10 bar, and the factor, the ATR length obviously is calculated on the 10 bars. Like for now it would be based on the last 10 hours. So currently it's 9:30 uh, p.m. So it would be somewhere in the morning, 9:30, uh, uh, or sorry, it's 10 hours. So somewhere around the afternoon, it would be from, it's calculating the data from. And the factor is 2. The factor 2, what it means is it's the standard deviation is 2. Like uh, on a Bollinger Band or something like that, when you see the distance between two standard deviations, that is your like guard or support or resistance on this on super trend when you are trading. So that means your this support at the current price is set on that factor. uh, if we raise that factor, if you will see that the price will the support will fall. If we just make that 3, and it will just go a little bit below. If we make it 1, it will just go a little bit further to the price, which can make it like stringy. You see that if you made it 1, there was a short signal this morning as well. But yeah, that would make defeat the purpose of a smoother price action, smoother trading cycles. There will be a huge number of trades, like 200 trades a month. We don't want that, so we'll stick to 2, and not be slow as well to get out or enter, and that's why we do not do the standard deviation to 3 as well. So 2 is generally accepted, and a lot of people use it. So that goes the like technical parts of the super trend. But now implementation wise, it's as simple as anything can get. So if we see the start of this cycle, this bullish momentum which ensued for the last has been going on for the last 2 weeks. It all started in this area. But what is the issue here of entry? The issue is uh, it's not actually a signal, because the fisher is against that trade. So we cannot actually enter according to the strategy that is written on every backtest document on the at the beginning. We clearly explain the we have clearly explained the like entries and exits and criterias that need to be followed while trading the strategy. So that's not an entry, because the fisher is against it. We need both of them to be for the trade. So what we'll do, what can we do? We can just wait for the fisher to turn, which it does at this point, but then it is a little bit further from the super trend. So we just if we just wait a bit, and uh, or we can, maybe it's not too far, we can actually sometimes go to the trade in this point as well. But this is a really good point, because it's turning. There would be some uneasiness on the price, and we can actually wait. This part, this little bit is something that the trader has to do. They have to follow the price and trade accordingly. So this is a signal. This is as clear as day gate. The price is hugging uh, the super trend support. The fisher has just broken out. It's a very good entry. The risk is as low as it can get, because the price is already at the super trend, and if it closes below, it will not close too further below. So it's very low risk and high yield signal. So if we take that, uh, we have almost nothing to do but manage our trade for the next. It's a longer trade, longer side. Our exit comes at this point. It's on the 7th of November, and the price we entered at on the 1st of November. So it's a Wednesday to Monday trade. So it's 3 day, 3 sessions of whole sessions trade. Uh, but yeah, what happened is Supertrend broke down. We got our exit signal. It's very, very simple. It doesn't matter if the future is going strong. We don't need that. We just wait for the trade to close, and we just wait for the next signal, which comes at this point 2 days. Oh no, just on the same day as well. No, sorry. This was 6th of November and this is 7th of November. So one day later, we get another signal, and that rate goes on for like a couple of days, I think. Yeah. So one day more that goes on, uh, and that way that's another sort like close signal, and we wait in a couple of hours, 3 hours, we get another entry signal. So that is the cycle of it. Right? It just goes on. Maybe some or not all of these trades are yielding very much, uh, but like I said at the beginning of the strategy itself, we cannot trade that way. We need to be vigilant. We need to be wary of the strategy. It will round on a longer term basis. If we make discretionary decisions, then the result is not incumbent upon the strategy. It is dependent on the person that who is making that decision. It can be you, it can be me, it can be someone else completely, it can be an analyst, risk manager, anybody who makes that decision. It will be dependent. The results of the final performance of the team would be based on their abilities, not the strategy's abilities. So those two things are different. Uh, yeah. So, mm, so the last trade, as you can see, is still going on. There is almost nothing to do. Fisher is still very strong. The price is already creating some sort of a like double top, maybe not, and still like getting the support at the that super trend level. If it breaks down, it breaks down. We just get on with it. We just wait for the fisher to turn. If it does not, it can actually bounce back. It can actually go above from there, as I like not projected, but yeah, estimated because of the dollar movements and all. I'll not get into that as well. It's just really simple. If this support breaks down, we get our exit signal. That's as simple as an exit strategy can get. We don't need to like find the tops. We don't need always to find the tops. Without finding tops, the strategies have yielded very well in the back tests. So if we can just do that, I think this has the material to do enough. So there is another kind of exit which I think on the natural gas backtest, maybe I did an exit like that just to show if that is also possible. It didn't necessarily need to do that, but this is also a kind of exit that can be done when necessary. So this opens on again Monday, but we could easily have closed this trade on the Saturday close, like Friday night close. So this trade could have been closed at Friday night, and because this is opening and holding, we can just get back on it, or might not choose to. So the ideal thing would be just to get on it if it opens at the same level. because what we are essentially doing, we are just protecting ourselves from the weekend risk. So things can happen over Saturday and Sunday. There can be like uh, geopolitical news that is, or like war or something like that. There can be, sometimes there are scheduled event on Saturdays in China, especially. We don't see that much on the US front. They generally keep their weekends clean, uh, uh, but in the Asian markets, on even the European markets, there are some events that that happen over the weekend at the different parts of the year, different times in the year. So that is also something we can keep an eye on, like closing our trades on Friday at the close, like 1 minute or 2 minutes before the close, and then just getting back on that if that price is opening at the same level, holding uh, when the market opens Monday morning. So it's just basically the same without the risk. We just maybe a little bit of commission is extra, that is cost. But the profits, the benefits, might be at some points like very, very good, because there are sometimes like markets open radically on the weekends. So like what happened in natural gas, especially in something like natural gas or crude, the things like that happen very, 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 very much. uh, yeah, we didn't actually have a trade ongoing on natural gas, but the price did open a couple of percent, sorry, more than like 3% above the like close. So that's a big gap up open. So if we were in a trade, it would be really hard to like maybe a profiting trade getting into a loss and something like that, or maybe a losing position getting into more loss. We don't want that, and because we not want something like that, I think the Friday close is a very good idea. A lot of people follow it also. uh, so other than that, the strategy is, as I said, is pretty uh, self-explanatory, and there are no like discretionary, especially part to it. If there is discretion, there is the traders need to make decisions, the analyst needs to make decisions. So here there is nothing like that. uh, yeah, but yeah, also there might be trades. I just wanted to show this also. There might be trades like this, which might whipsaw quickly, and I would like, there might be some advice for the traders as well. These trades, this kind of trades, they have to be as vigilant as they can, because this is a obvious bullish trend on the like Fisher, but the price is not doing that well on that like uh, sorry, on that mm, on that signal as well. So the price is only jumped 2.86% in like a long period of uh, 7 days, and there have not been that much movement. The price has been sideways. There has been a lot of false trades, but still I would advise like trading these signals, because amongst these like evidently bad signals, there would be signals that no one sees coming. Those gems would make up for these sort of bad trades. And while the traders can be careful, mitigate as much as loss they can do, I would advise trading all signals, because like I said, amongst those bad trades will be the trades that truly makes like the strategy like sign. uh, so that's, I think, pretty much it. We can also look at a short signal like this one. This is a pretty evident Paris signal on the Supertrend, as well as Fisher. Fisher has been bearish for a long period, uh, and we get a Supertrend signal, and we just trade. We just close this here. This is a good trade. That's generating like something like 2.5% over not that much of a period, long period. It's maybe 5 4 5 days. No, not even that. It's just 2 days of trading, and we get 2.5% on the trade. So these types of trades will happen, and these type of bad trades will also happen. So it's just something we just have to endure to get the good trades. Because, and like I said, because we are using ATRs, and our losses are protected. Our losses should not that be that big unless we have obviously sharp movements in the market, which there are only few instances of those. And over a long period of time, I think that 7% 8% mark every month can be hit, and with leverage, that can be huge. Yeah. So I think that's all for now on the strategy. If you have any questions or queries, uh, and any complaints about this as well, I am available, and I can get back to you on everything. Thank you. Yeah. Have a good night, and I'll continue on the other work. Just give me your feedback when you go through this. Thank you.